Welcome to Illuminati Silver. We tell it the truth about silver. Today is Wednesday, the 15th of September 2021, and we're producing our gold and silver morning update and price forecast. Gold and silver prices have risen this morning, or certainly over the last 24 hours, on the back of lower bond yields and a weaker dollar, as CPI figures for August reveal an improving position. So let's take a look. Welcome to Illuminati Silver. It's Wednesday, 15th of September 2021, 10:06 a.m. GMT +1. The weather is warming up. It's getting hotter. Just like UK inflation. Surges. The heat isn't surging yet, though. UK inflation surge prompts bets for sharper rate increase. Let's take a look at this. UK inflation surged more than expected to the strongest pace in more than 9 years, prompting investors to anticipate a sharper increase in interest rates in 2022. That's not going to be very good for the mortgage market. Not so bad for savers, but not good for the mortgage market. Consumer prices jumped 3.2% in August from a year ago, the most since March 2012. The reading was up from 2% in July and above the highest estimate in a Bloomberg survey. While much of the increase was due to a comparison with last year's discounts on restaurant meals, more enduring signs of inflation is fueling expectations that more hawkish Bank of England officials will gain the upper hand in the debate. Policymakers have shifted toward concerns about labour and material shortages, leading to more persistent inflation, with a surge in energy costs due to hit in coming months. According to Dean Turner, the economist at UBS Global Wealth Management, he says, quote, "The figures will keep the Bank of England in a hawkish mood, laying the ground for a rate hike in the first half of next year. In light of this, the prospects for the pound remain bright." Okay, little worrying. Christine Lagarde, head of the ECB, sees part-time home office outlasting pandemic. Office workers probably won't return to their desks full-time as companies learn to live with flexible arrangements during the coronavirus pandemic, according to ECB President Christine Lagarde. Quote, "We're heading towards a hybrid movement where part of the week will be spent in the office so that people can meet, can see each other, can hold regular meetings and have face-to-face contact," she said on the David Rubenstein's show, Peer-to-Peer Conversations. "But the rest of the week will likely be working from home. We're entering a new world order." According to the BBC, price rises see record jump as food costs soar in the UK, reinforcing the Bloomberg article. John Lewis, though, to create thousands of Christmas jobs. That's interesting. Partnership is looking to fill 7,000 temporary roles across its shops, department stores and warehouses. I love this one. Pennies back in production as cash is hoarded. No new 1 penny coins were made by the Royal Mint in 2018 and 19, but production resumed last year. People are literally saving their pennies. In the United States, we have California Governor beats bid to oust him, according to the US media. Let's take a quick look. California Governor Gavin Newsom appears to have survived a rare statewide vote to remove him with a clear majority. Republicans launched the election over his handling of the pandemic. The Democrat, currently in the third year of his 4-year term, had faced a field of 46 candidates and was expected to win by a large margin. Both President Joe Biden and Vice President Kamala Harris campaigned with Mr. Newsom ahead of the contest. "I'm humbled and grateful to the millions and millions of Californians that exercise their fundamental right to vote," Mr. Newsom said in a victory speech in Sacramento. Mr. Newsom's main rival, conservative radio host Larry Elder, claimed that the vote was rigged before polls even opened. Interesting indeed. Unfortunately, comedian Norm Macdonald dies at the age of 61 from cancer. And I think that is broadly the majority of the main news in the United States, according to the BBC, that is. Okay, let's look now at financials. As we can see, the dollar is down 0.166 at 92.45. Energy prices marginally up, really to reflect the fall in the dollar, up 0.65 of a dollar for WTI crude and up 0.59 of a dollar for Brent crude. Equity markets, well, not so good in the United States yesterday, broadly down anything between 0.5% to 1%. In Asia overnight, following on again, falls of between 0.5% and nearly 2% in case of the Hang Seng index. And mixed bag really in Europe and the UK this morning. Euro stocks index down 0.05%, whereas the FTSE is up 0.03% and the DAX is up 0.01%, but the CAC is down 0.19%. Of course, the markets are being affected by varying economic data, and we can see that according to the Consumer Price Index published yesterday, we can see that consumer prices actually fell in August, as is measured by the CPI. So you've got the Consumer Price Index at 0.3% against expectations of 0.4%, and core CPI at 0.1% against expectations of 0.3%. So that is a much better, if you look at it from the government's point of view, result. However, it's quite notable that if the CPI is not so problematic, the natural expectation, therefore, is clearly that the government has less pressure to raise interest rates and to curtail spending. Or has it? Are they reading into this? Well, if inflation's now no longer a problem, we can curtail our bond buying because, quite frankly, inflation now isn't going to get worse. We don't need to pump more into the economy, and so as a result, we can slacken off. It's an interesting one, because one would have expected almost the opposite to occur. In other words, for the stock markets to rise exponentially because they realize that we're not going to have interest rate cuts sooner. This is the dilemma with economics. You can look at the same figures from two very differing sides and come up with an alternative or differing or even paradoxical solution to the issue. But what has happened for sure is that the likelihood of not having interest rate rises, forget the bond buying for a second, means therefore that the dollar value could actually fall a little, which is why we are seeing this morning gold up $12 and has hit this psychologically important level of 1800 once again. Now, the technicals say if it surpasses this and holds, it's going to aim for 1830, which is where the next resistance level lies. Of course, if it falls back, then 1750 is key support ultimately. Silver too has benefited as a result. That's up 18 cents at 23.80. Now, this is a major resistance level for silver, with the 20 EMA holding at exactly $24. So silver might struggle to get beyond 24, but we could certainly expect to see some movement between 23.50 and 24 of the next day or so. If silver should fall back, however, then you have support at 23.50, then 23.20, and just below 22, in fact 22.90, should provide quite strong support. We don't naturally see it going down to that level, certainly not this week for sure. Cryptocurrency prices, what's happening in crypto world? Well, the market cap's back up. It's now $2.129 trillion. Some coins are up, some coins are down. Looking at the three biggest gainers in the marketplace, we have Sono coin up 154% in a day, eCoin Finance up 126% in a day, and CP Chain up 122%. What I find interesting, there's a debate going on now saying that if the crypto markets continue at the rate that they're growing, you could see a market cap of 10 trillion within a couple of years, eventually rising to the same market cap as the equity market, with people being more attracted to invest, gamble, speculate in cryptos than in shares, which are more pedestrian. I think that's fanciful, but I can understand some of the logic behind that, providing, of course, governments and central banks allow cryptos to survive and prosper. What are your thoughts? Do share them below. We see a little bit of good news for gold and silver this week, but nothing outstanding. We have more economic data to come out today, which will have a bearing, no doubt, providing it is far removed from expectations. We've got the import price index and the industrial production index. And then tomorrow, even more important, retail sales, jobless claims. Please give us a thumbs up, subscribe, press the bell sign. Have a great day. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.